If you are a consumer of traditional media, or even just a follower of Bitcoin Twitter, it has been a relatively quiet week, as it often is during the holidays. Nonetheless, Bitcoin does not take a vacation, and as such, we do have a lot to talk about today. So sit back, relax, and let's dive in. This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and/or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy. Guten Tag, Buenos dias, Morgen, and welcome to the first episode of 2025 of the Bitcoin Bulletin Podcast. I am once again on the road for this episode, or still on the road as I should say. Last week I was dealing with a Bitcoin hack. If you listen to last week's Bitcoin Bulletin Podcast entitled, Getting Hacked for Christmas, you know the story, but fortunately that drama is behind us. And I'm now spending a little bit of time with friends and family before I head back to the Space Coast. But I digress. One thing that is unique about today is that because it is New Year's Day, traditional markets are closed. You cannot buy or sell your Bitcoin ETF, but you can stack sats. And because the normies have taken the day off, there is less TradFi chicanery out there. It is more like a Sunday in the statistics. As I've been browsing through Bitcoin's vital statistics than what a Wednesday normally looks like, at least from that perspective. And you can definitely see it in the statistics. So before we dive into the meat and potatoes of this episode, let's take that customary look at Bitcoin's vital statistics. At the time of this recording, we are sitting at a block height of 877,379. And Bitcoin is ringing in at a US dollar value of $94,580 per Bitcoin. That's down about $4,000 from last DCA Wednesday, but not as low as it had been. We've seen Bitcoin pull back from its all-time high of around $108,000 to around $92,000. We saw that pull back a couple of times now, each time Bitcoin breached 100,000, even though it bumped all the way up to 100K. Largely, it speculated on MicroStrategy's aggressive buys, since their most recent purchases were at an average price of $106,000 per Bitcoin. But I digress. Bitcoin's current US dollar value means that for every fiat US dollar that you convert into Bitcoin, you will receive 1,057 sats. So while some of you are looking at the price saying, oh, my Bitcoin's less valuable than it was last DCA Wednesday, I want to remind you that one Bitcoin is always worth one Bitcoin. But most importantly, while you're trying to grow that stack, it means that the price we're looking at right now, you will receive 47 additional Satoshis per dollar, more than we received when we did that stack last DCA Wednesday. And I am always excited when I get to receive more Satoshis than the previous purchase. Bitcoin's current price gives it a market capitalization of $1.87 trillion. Again, a little bit less than last DCA Wednesday, but still a respectable market cap, something that we hadn't ever achieved before about a month and a half ago, for the first time ever, when Bitcoin breached 1.9 trillion around Thanksgiving, and then of course went on to breach 2 trillion, a number which we will retake shortly, mark my words. But again, I digress. For those of you who value your wealth in shiny yellow rocks, it will currently cost you 36 ounces of gold to purchase just one Bitcoin. 1 year ago, on the first DCA Wednesday episode of 2024, it would have only cost you 21.3 ounces of gold to purchase that one Bitcoin. So, as they say, you get Bitcoin at the price you deserve, and currently, that is more than 2 pounds of gold for you gold bugs out there tuning into this podcast. And speaking of gold, over a couple of the last episodes, we had mentioned new gold deposits being found. There was reported that a huge gold deposit was found in El Salvador, and now it's being reported that Chinese geologists have discovered a supply of gold estimated at more than 1,000 tons. If that's true, that would be the equivalent of adding an extra 0.5% to the global supply of gold just in that one additional discovery, something that can never happen with Bitcoin, with the ultimate supply of Bitcoin being permanently capped at 21 million Bitcoin forever. For those of you who value your wealth in pizza, one Bitcoin will purchase you 5,285 large pepperoni pizzas from Papa John's, a staggering amount when you consider that the very first real-world transaction for Bitcoin took place when Laszlo purchased 2 Papa John's pizzas for a staggering 10,000 Bitcoin back in 2010. So we have certainly come a long way as pizza trends to zero in Bitcoin terms, as does everything else. All right, that metric that you know has been my favorite metric for the entirety of this podcast history, almost 4 years running now, Bitcoin's 24-hour average transaction rate. Well, it's down a little bit from last DCA Wednesday, currently averaging 3.47 transactions per second. And once again, that's consistent that when Bitcoin's average transaction rate has been trending down, the price has been trending down. So the average transaction rate is down about 1 transaction per second over last DCA Wednesday, and the price of Bitcoin is down about $4,000. So again, that's not any official TA. I think that transaction analysis is basically voodoo. It's basically make-believe. Nobody knows what Bitcoin's going to do. Maybe there might be some merit when you're talking about legacy financial assets based on the earnings of a company and how that would impact a stock price. But when it comes to Bitcoin, nobody knows what Bitcoin's going to do other than if you zoom out, we know it goes up and to the right. But one of the reasons people get wrecked trying to trade Bitcoin is even during an epic bull run, you don't know if tomorrow the price of Bitcoin is going to go down or sideways or rocket to the moon. It's completely unpredictable. But in the almost 4 years we've been doing this podcast, it is interesting to note that when on-chain volumes are down, the price is usually down. So again, correlation doesn't equal causation, but it's been fun to watch over the last 196 episodes now. Speaking of on-chain activity, Bitcoin's mempools, depending on which mempool you're looking at, or maybe if you're running your own mempool, you have your own data, but Bitcoin's mempools are a little less full in general than they have been recently. Clark Moody's mempool on the Clark Moody's Bitcoin dashboard is actually up a tiny bit, but again, they're running the default mempool, so it doesn't have as many transactions in general as there really are out there pending. But nonetheless, they're showing 117,118 transactions pending in their mempool. Mempool.space, with their much larger mempool, is showing a significant decrease in pending transactions. Last Wednesday, we were looking at over 256,000 pending Bitcoin transactions in the mempool.space mempool. Currently, that's down to 178,563 transactions, which goes hand in hand with that decrease in average on-chain activity. Because of that, if you do need to make an on-chain transaction, the fees to do so are staggeringly cheap compared to where they had been over the last year. Currently, Clark Moody's fee estimator is saying that if you have a transaction that you need to guarantee is mined in the next block or so, it's only going to take a fee of 2 sats per VByte to do so. They're recommending a fee of 2 sats per VByte, even if you have up to a day to wait. And they're saying that a fee of 1 sat per VByte will be mined within a week. In my personal experience, I would say that you have a fairly good chance of having that 1 sat per VByte transaction mined today. As the normies get back to business in the next day or two, maybe that'll change. But currently, there are plenty of blocks out there that are including 1 sat per VByte transactions. Mempool.space is recommending a fee of 2 sats per VByte for any transaction, whether it's an incredibly urgent transaction or a completely no priority transaction. And plebs, at the current price of Bitcoin, which is still what would have been an all-time high just 2 months ago, that works out to just 26 cents in US dollar terms. To be able to wield the most powerful financial technology ever discovered, 26 cents for a transaction is just dirt cheap. I don't know any other way to put it. If you're one of those people who still have some very small UTXO sets out there, under 100,000 Satoshis, maybe even less if you've been DCAing directly into a hardware wallet, and maybe you've been making 20,000, 30,000, 50,000 Satoshi stacks that you have out there in your hardware wallet, now is the time to consider consolidating those when you can do so for next to free. I mean, 2 sats per VByte is as cheap as we've seen it in a long time. And as I said, there's even 1 sat per VByte transactions routinely getting mined today, and has been all week, actually. I'll get a little bit more into that when we get onto the news section. Since last DCA Wednesday, there has been a small upward difficulty adjustment in the difficulty required to mine, the difficulty it takes to mine a block of Bitcoin. The difficulty was adjusted up by 1.2%, so pretty negligible, but still, just like the price of Bitcoin over time trends up and to the right, the difficulty that it takes to mine Bitcoin has been trending up and to the right at about the same rate as Bitcoin's price. We're currently 1,597 blocks away from the next Bitcoin mining difficulty adjustment. As you know, Bitcoin adjusts its difficulty every 2016 blocks, which is theoretically about 2 weeks, with the goal of having Bitcoin transactions coming in at an average time between blocks of about 10 minutes. If they're coming in faster than 10 minutes on average, the difficulty goes up. To slow that down, if they're coming in slower than 10 minutes, which happens sometimes, the difficulty is reduced downward to speed those blocks up. It is way too soon to tell. The reason why they took 2016 blocks for their average time is because sometimes blocks take an hour to come in, and sometimes 2 blocks come in within a minute, because it is basically random chance. And so if you were to have a much shorter average period, you would be seesawing that difficulty all over the place. But by waiting 2 weeks, or 2016 blocks, not 2 weeks, we get a much more reliable figure for what the difficulty adjustment should be. And when we're this close to the last difficulty adjustment, those estimates can be all over the place. Because again, blocks, we've had less than 500 blocks, so that average is much smaller. Nonetheless, the fee estimators out there, or the difficulty estimators out there, are saying that we're currently looking at a decrease in mining difficulty of anywhere between 0.06% to 2.2%. I would be surprised if that holds. Maybe next DCA Wednesday we'll have a better picture, and I would not be surprised to see that that's actually going to be a difficulty increase. Again, a lot of this isn't really important if you're not a miner. If you're a miner, it means you might be looking at being 2.2% more profitable in 2 weeks. But if you're just a pleb like me doing transactions on chain, it really doesn't affect whether your transaction is going to be mined within 10 minutes or not, because you might be lucky and get into a block that only takes a minute. And if you set a really low ball fee, like I always do, it's going to take a couple blocks to get mined anyway. So why it is important is because it is an indicator of the health of the Bitcoin network. The more hash power that's added to the network, the more permanent Bitcoin becomes, the more impossible it becomes to ever try and tamper with the blockchain. So that's really cool. Currently, in just the 500 or so blocks we've had, blocks are averaging 10 minutes and 15 seconds, which obviously is slower than 10 minutes, longer than 10 minutes. So if that holds, that would make sense that we would see a slight difficulty adjustment. But again, I don't think that'll probably be the case. Who knows? It's another thing I don't have a crystal ball about. But if you look at the estimated computing power securing the network, it's currently estimated to be 739.7 exahash. That's up pretty significantly in the last 2 weeks. 3 weeks ago, we had just breached 700 exahash for the first time. So like I said, if you zoom out, the network hash rate is going up and to the right at a relatively incredible pace. And so I would expect the difficulty adjustment to do the same. Real quick, I want to take a minute to thank those of you listening on your favorite Podcasting 2.0 app, such as Fountain. Podcasting 2.0 allows you to support this podcast through the value for value method by either streaming sats on a minute-by-minute basis as you listen, or by sending a boost, which is a shout-out via a Lightning transaction where you can let us know what you think about the podcast, let us know what's going on in your community, maybe you have a meetup coming up, or even just say hello. Really, you can say whatever you want, but because it is a Lightning transaction, you are sending value back in the form of Satoshis. And again, that's a you do you thing, like almost everything in Bitcoin. You determine the value that you feel you're receiving by listening and set that accordingly. And so you can stream 1 sat per minute, or 10 sats per minute, or 100 sats per minute, or boost a couple hundred sats, depending on what you feel you're getting in value from listening to this podcast. We do not have any boosts to read this week. It's been pretty quiet out there. It's been quiet as far as our podcast statistics show, as far as on-chain transaction shows, pardon me, and just as far as all the other podcasts I like to listen to. A lot of people are taking vacation, even us Bitcoiners, even though Bitcoin trades 24/7, 365. Most people are out there celebrating with their friends and family this time of year. So it's quiet. But if you do support the podcast through the boost method, we do read the boosts on the forthcoming episode of the Bitcoin Bulletin Podcast. Speaking of our listeners, our geographic distribution of listeners is as follows. The top 10 countries, number 1, where more than half of you are listening to the sound of my voice, are in the United States of America. So hello and thank you. Happy New Year to all my fellow Americans listening from wherever you may be in the United States. I'm currently way out west from where I'm normally at, but that's the cool thing is wherever I go, there's always plebs. And that's pretty neat, whether that's in the United States or anywhere in the world, as our statistics plainly reflect, because the number 2 country, and this was a big change about a month ago, but has been relatively consistent since then, is Singapore, which surged to the number 2 spot and now make up more than 10% of our podcast listenership. So thank you to those of you listening in Singapore. Apa kabar to those of you who are. Number 3 remains Germany. That's been the case for many, many, many months. So Dankeschön, mein Freunde im Deutschland. Thank you for listening. Number 4 remains Argentina. So muchos gracias, amigos. Prospero años. To our amigos in Argentina. Number 5 remains Luxembourg. So again, Dankeschön, mein friends in Luxembourg, or Morgen, to those of you speaking Luxembourgish. Number 5 remains our neighbors to the north, Canada. So hello and thank you to those of you up in Canada. Hopefully you're taking advantage of the cool weather by running a couple of old ant miners to help heat your home. Number 7 remains the United Kingdom. So hello and thank you to our cousins across the pond in the UK. Number 8 remains Spain. So hola, muchos gracias amigos in Spain. Prospero años. Number 9 remains our cousins, our distant cousins, who have a remarkably similar origin story to the United States. Not quite the same, but similar in that they were once part of the UK. So hello and thank you to those of you listening down under. Number 10 remains Mexico. So hola, muchos gracias amigos in Mexico. And thank you everyone, regardless of where you're listening. It is both humbling and flattering that we have so many listeners in almost every country you can name. If you scroll through the stats, you know, it might be just 1 or 2 listeners, but literally I've got listens in almost every country I can think of. And that is really cool. I mean, it should come as no surprise because Bitcoin is for everyone. Bitcoin is a global phenomenon. But it still just warms my heart to know that you're out there listening all over the world. So once again, thank you to one and all for listening to the Bitcoin Bulletin Podcast. So I'm going to do things a little bit different, and I am trying to keep this a tight rip because I have a hard stop coming up in about 20 or 30 minutes, and so I need to speed through this. But I did want to do a bit of a year in review, and not the typical year in review that you get from all the other Bitcoin podcasts where they recap the news stories. I want to talk about our DCA year in review. We started 2024 when Bitcoin was just $42,748 a Bitcoin. For those of you lamenting $94,000, $95,000 Bitcoin and feeling like the price of Bitcoin crashed, all you have to do is look back to January 3rd, 2024, or the first DCA Wednesday episode of 2024, episode 128, when we stacked at $42,748 US. And because Bitcoin was so much cheaper, that stack got us 45,733 sats. That's more than double what we're going to get today for our $20 US, unfortunately, but you know, that's the nature of the beast. We ended 2024. Our final stack was on Christmas Day. Obviously, that podcast came out a little bit late, and if you haven't listened to episode 195 yet, please do me a favor and go back and listen to it. It obviously helps boost that algorithm monster, and which supports the podcast. But it's also, I think it was an entertaining story and a cautionary tale that I know everybody's familiar with the ways that you can be hacked and with phishing scams, etc. But this one had a bit of a unique spin on it, something I certainly didn't expect. Really surprised me, to say the least. Either way, on Christmas Day, we stacked at a US dollar price of $98,866 US. And because with fees that worked out to over 100,000 US dollars, we only received 19,744 Satoshis. for that stack. In between January and December, we stacked all the way up at whatever the price was on Wednesday. That's the nature of the beast with DCA, which takes the guesswork out of trying to time an untimable asset. But nonetheless, we did stack above the $100,000 mark twice. On December 11th, we purchased at $101,030. And then again, the next Wednesday on December 18th, we stacked when Bitcoin was ringing in at $100,535. The cheapest we stacked wasn't on the first episode of the year. It was actually on the fourth DCA Wednesday episode of 2024 on January 24th, 2024, when we purchased for just $39,845. That is a number people are already calling you lucky. Wow, you're lucky that you bought at $39,000. Plebs, if you were DCAing, you did that too. And it wasn't luck, it was dedication and commitment. And mark my words, anything below $100,000 in the next couple of months, it's going to be considered lucky. But certainly 4 years from now, after the 2028 halving, when we're in 2029 and we're in the middle of that halving's bull run, when who knows what the price of Bitcoin is going to be, but certainly it's going to be more than it is today. And they'll be looking back on every stack we make in 2025 and calling you lucky for having purchased Bitcoin so inexpensively, even though it might seem like a lot right now. During 2024, we had 52 stacks because there were 52 Wednesdays in 2024. So we converted a total of $1,040, $20 at a time, into exactly 2 million sats. That really surprised me when I went through and I was doing the stats, the show prep for this episode. I didn't expect it to be 0.02 Bitcoin exactly, but that's how it worked out. And so that 2 million sats, for those of you who aren't quite on that sat standard yet, that 0.02 Bitcoin was a significant chunk of Bitcoin, considering that, at the time we only invested, over the year, we only converted $1,040. But right now that Bitcoin's worth around $1,900. So that's not too shabby. On to a little bit of the news before we get on to our first DCA stack of 2024. And of course, as I said, there hasn't been a lot of news reported during the holidays. And that's not to say there hasn't been news, but it's because that people have a lot on their minds this time of year. But, a lot of discussion that's out there, of the discussion that is going around on Bitcoin Twitter, has remained about the price. And as I just summarized, if you began your DCA journey even just this year, you're doing quite well compared to Normieland, up about 80% over where we started the year. And there aren't too many other assets that performed at 80%, closer to 100% return over the last year, even with the stock market having a quote-unquote record banner year. But as I said, Bitcoin has a funny way of changing your perspectives, and part of that is reshaping your expectations about price. Even though we only saw Bitcoin above $100,000 for just 2 DCA Wednesday episodes, a lot of people are disappointed with Bitcoin's current price. Again, I want to remind you, and I've said this on many, many episodes, both about this cycle and during the previous cycle, that it is normal for Bitcoin to have between 5 and 7 significant pullbacks during its bull run. We're talking 20, 30%. Or so. During a epic bull run, Bitcoin still has had those 30% pullbacks. But most importantly, I view each and every one of these pullbacks as opportunities. Again, a couple weeks ago, each dollar that we converted into Bitcoin was purchasing less than 1,000 sats. Remember this if you're currently disappointed with sub $100,000 Bitcoin, because we're going to stack more sats today than we were able to, or that we will be able to when this bull run resumes. And mark my words, it will resume. Nobody knows how much longer this Bitcoin retracement will last. But one thing is certain, the euphoria phase of the bull run is still months away. I discussed that in the last episode as well. It just simply isn't the correct timing, if history repeats or even rhymes, for this bull run to be anywhere near its all-time high, or its cycle high. We are still early in many, many ways. And is often the case when it comes to price. Lena Seiche, or Seiche, depending on how it's pronounced, and I still haven't gotten confirmation on this, but the creator of the Little Hodler comics, the Little Hodler plushies, put this into perspective in her brilliantly simple way with a comic she tweeted 2 days ago now, and it's she said on the tweet, this is for the next time you're not sure how to feel about the price. And it's a 3-panel comic, and in each of the panels, the littlest toddler is looking at the chart. And in the first panel, it's a green candle, and it's going up, and the price is 94,000. And the little toddler is celebrating, and it says good with an arrow pointing to the chart. The middle panel, the price is still 94,000, but the chart has been trending down with an arrow pointing to it and saying bad, and the little toddler has a shocked look on their face. The third panel, the price is still 94,000, and that price is going sideways, a bit of a crab market. And the littlest toddler is looking perplexed and says, boring. So, as usual, Lena puts exactly what I was feeling into perspective in 3 quick drawings. Another interesting thing happened this week while the day traders and S-coiners have been on vacation. And as I spoke about this and I already spoke about this when we were talking about the statistics, but the fact that transaction fees have absolutely plummeted. I tweeted this out on Monday, for example, saying 1 sat per VByte transactions have been getting mined the last 5 blocks in a row, with a screenshot from mempool.space showing blocks 877,006 through, 002 through 006, all of which included fees as inexpensive as 1 sat per VByte. In fact, block 877,005, the most expensive transaction, was 40 sats per VByte. And it's not unusual to have a big spread in fees because, when people are, when exchanges are moving their Bitcoin around, for example, if you're using Cash App like we're going to, when we transfer to a hardware wallet, they batch that. And so they overpay because they need to guarantee that block gets mined right away. And it's not unusual to see big players way overpay mining fees because, whether they pay 26 cents or whether they pay $7 makes no difference to them at all if they're moving millions of dollars with the Bitcoin or billions of dollars with the Bitcoin in Michael Saylor's case, for example. So the point is, almost every block has fees that are more like 500 or 600 sats per VByte, but block 877,005, the highest fee paid was 40 sats per VByte, and that is just incredible. That means even those who were overpaying still got in for 40 sats per VByte. So as we touched on in the statistics section, it is currently happening again. The last 5 blocks in a row all included transactions at just 1 sat per VByte. Then the 2 blocks after that, or before that, had sats in the 2 sat per VByte range. And then the next 5 blocks in a row after that all included 1 sat per VByte transactions. So that begs the question, did Marty Bent win his bet with Matt Odell when he was betting that the mempool would clear? Because they weren't betting that the mempool would show 0 transactions in it. Their criteria was that I think it would only be 2 blocks in a row included 1 sat per VByte transactions by the end of the year. So if by that metric, if that was the case, then congratulations, Marty, for winning that bet. Okay, I have devoted a decent amount of time to reminding people, to especially the newcomers, the people that have just gotten off zero, or maybe they're still pre-coiners, but you're listening to this podcast because you're thinking about becoming a Bitcoiner, about that despite the fact that we've seen 100,000 Bitcoin, we are still early. I mean, I've said this multiple times already in this episode. We're early in this bull run and you're early to Bitcoin. Lynn Alden, though, summed it up very nicely a couple of days ago when she tweeted the following. And she's at Lynn Alden Contact on Twitter if you don't follow Lynn Alden. She's brilliant, by the way. So if you're not following her, you need to. She tweeted, around 4.5 million addresses hold at least 0.1 BTC. Some people hold multiple of those addresses. While taking a few million, we're talking a few million people out of billions. And that competes not just with banks, but holding value in stocks, real estate, gold, etc. So if you're worried you're too late, last episode and a couple episodes before that, I mentioned that just for Bitcoin to fulfill the role of digital gold, the price needs to 10x. So if you're worried about price and thinking you're too late, put it into that perspective. But if you're worried in general, we're talking 4.5 million Bitcoin addresses that have a significant amount of Bitcoin, a significant number of Satoshis out of billions of people around the world. So if you believe that, maybe even if you don't believe that Bitcoin will be the new global reserve currency, but if you just believe that the majority of the world, say 50%, maybe even just 25% of the world will be holding Bitcoin one day, even if it's just as a savings account, that is significantly more people. I mean, we're talking more than double. We're talking more than 10x the number of people that currently hold a significant amount of Bitcoin. And in order to be able to do that, when you're talking about a fixed supply asset, the only way to pull that off is for the price of Bitcoin to go through the roof. So rest assured, whether you're talking about this bull run or whether you're talking about Bitcoin in general, you are still early. Of course, it is the new year, and with the dawn of a new year comes a slew of new laws and regulations, one of which I want to highlight really affects our European friends, and that is the implementation of the travel rule when it comes to Bitcoin transactions. The travel rule basically is a banking rule where they say that basically any money that's sent back and forth, they have to know where it came from and where it's going. And now in Europe, effective today, that applies to Bitcoin transactions as well. And Greek HODL tweeted about this on New Year's Eve, tweeting, "Looks like today is the last time I am buying KYC Bitcoin. European Union is an S-hole. These regulations are regarded. For real, WTF is this?" And he tweeted out a notice from Strike saying, talking about the travel rules, saying, "Hi, we want to inform you of an important regulatory update that will impact how you send and receive Bitcoin through Strike starting in 2025. This change is in response to the travel rule, which has been adopted by regulators in both the European Union and the United Kingdom." What is the travel rule? The travel rule is a set of regulations, blah, 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 as I just explained, that require you, I'm not going to read this whole thing, but the long and the short of it is, if you're a European Union pleb right now, you're going to be required to do the following. And this isn't just with Strike. This is wherever you buy Bitcoin from any regulated entity. It means if you're purchasing Bitcoin, if you're sending Bitcoin to a hardware wallet, or if you're sending any Bitcoin, you're going to be required to confirm that either the destination wallet is yours, or you are going to have to provide details such as the name and the address or the crypto asset service provider, if it's another exchange, that will be receiving your Bitcoin. And that is just FUBAR. Hopefully you Europeans make a loud enough stink about this that you get that repealed. But if you are listening from Europe, and well, this actually applies to everyone everywhere, but especially if you're listening to Europe, I hope you got your Bitcoin off of the exchanges before this nonsense took effect. If you haven't, maybe you can start finding an OKYC way to purchase your Bitcoin in the future so you don't have to deal with this for the rest of your life with every Bitcoin transaction you make, because that is just screwed up. And this is one of those, and then they fight you things. Nobody is under any illusions in any government or bureaucracy at this point in time that they can stop Bitcoin, that they can shut it down, that they can just make it, that they can ban it. We're way beyond the point when governments were naive enough to believe that. But how they're going to try and control Bitcoin is by making it a nuisance, like in the United States, where you have to pay capital gains tax on every transaction, regardless of how small that is. Buy a cup of coffee. If the Bitcoin's more expensive when you buy that cup of coffee than when it was when you bought it, that's a taxable transaction. Makes it a pain in the butt, right? Clever, sneaky way to try and discourage the use of Bitcoin. The travel rule is this in spades. So for those of you who are under the illusion that the governments have rolled over on Bitcoin, you ain't seen nothing yet. Fortunately, Bitcoin doesn't care, and you shouldn't care either. Just know that it's going to get a little bit more complicated to use your Bitcoin. And if you're in Europe, this is a big incentive to find a no KYC alternative. Before we move along, I think it's important to point out that former President of the United States, Jimmy Carter, passed away on Sunday. He was 100 years old, which is quite astounding. And this isn't specifically a Bitcoin story, but it is relevant because I have often compared what is currently going on in the world with what was happening in the 1970s. Inflation was out of control. There were wars popping off. The Middle East was in turmoil. There was terrorism, etc. There was general hate and discontent. And having lived through that, even though I was very young, I just got the eerie feeling that history is repeating. I mean, this feels a lot like the 1970s to me. So it was kind of perplexing to see. And I know the guy just died. They say you got to show some respect for the office of the president, even if you don't like the particular president, regardless of who that president was. And, show some respect for the dead, right? Especially for your elders and for those who have passed. But many of the headlines in the traditional media, it's not just that they were being gracious or gratuitous or nicely treating the memory of President Carter, but they were flat out painting they were gaslighting you on what the 1970s were like. This headline wasn't even the most egregious of them, but it's the one I clipped for this podcast in my show notes. And it was from Yahoo Finance. And the headline said, Jimmy Carter, who led the country during stagflation, dies at 100. And then it goes on to mention that he received a Nobel Prize for his humanitarian work. And he did deserve that. I mean, even when he was in his 90s, he was out there with a hammer building homes for the poor and the needy, personally building homes. How many presidents or kings do you see out there hammering nails, putting up housing for those in need? So, I often say that the difference between Joe Biden and Jimmy Carter was that even though Jimmy Carter was a moron, deep down inside, he was a truly nice man. And I still believe that. But what I want to point out about this headline is they say Jimmy Carter, who led the country during stagflation, dies at 100, when the correct headline should have been Jimmy Carter, who led the country into stagflation, dies at 100. Because it was really his policies and the policies of his administration that poured gasoline on the inflationary fire and led us to that stagnation. We had gas lines, which were a geopolitical situation where you were only allowed to buy gasoline for your car on certain days of the week, depending on what your license plate started with. And those lines were long, even though they were restricting what day you could purchase gas. It was just a big example, a horrible experience of big government and trying to tinker with the free market. And so deja vu all over again, I guess, because it seems like we've been experiencing that the last 4 years. Hopefully a lot of that is getting ready to change. Maybe Elon Musk and his Department of Government Efficiency will be able to have an effect and maybe make a bit of an improvement, at least here in the United States. But I just wanted to mention that on the week that we mourn the loss of a former president. All right. On to what makes today and every Wednesday so special, and that is because today is DCA Wednesday. What is DCA, you might ask, especially if this is the first time you've tuned into this podcast? Well, DCA is short for dollar cost averaging. And dollar cost averaging is an investment strategy where you invest your money in equal portions at regular intervals, regardless of price. So this, again, is a you do you thing. But for us, we chose our equal portion at just $20 US because I wanted to show that regardless of what your financial situation is, if you can come up with at least $20, just $20 a week, you can build an appreciable stack of Bitcoin, something I think hands down we've proven in the last 3.5 years. And of course, our regular interval is weekly. Again, that's a you do you thing. Most people that DCA, regardless of what the investment in, you DCA when you have the money, right? So usually if you have a Monday through Friday 9 to 5 job, you invest when you get paid. So if you get paid every other week, maybe your DCA is every 2 weeks. We chose weekly because it worked out nicely for a lot of people that do get paid weekly, and also because it works out nicely for a weekly podcast. So this is going to be our 180th DCA Wednesday. We started stacking that $20 a week all the way back on July 28th, 2021, so almost 4 years now. In that time, we've stacked 179 times, and we've converted a total of $3,580, which, when you think about just $20, some people, $20 isn't a whole lot of money, but when you're talking about $3,600 now, all of a sudden it starts to make sense that the power of dollar cost averaging, that even small amounts add up over time. And they've also added up to a decent stack of sats. That $3,580 is converted into 10,252,248 sats. And we did so at an average purchase price of just $34,919.17. Not too shabby, even for those of you who are upset that Bitcoin's only worth $94,000 or $95,000 US at the moment. So as usual, we're going to use the Cash App to add to that stack. Cash App is not a sponsor of the show. I just find them easy to use for smaller amounts. Again, this is a you do you thing. Cash App probably isn't even available to at least half of you listening to this podcast. It's mostly a US thing. So you do you. You choose a service, an exchange, an app that you feel meets your needs. We're going to use Cash App. So I've already got Cash App open. It's just a matter of tapping on Bitcoin, tapping buy, and entering $20. Tapping confirm, and boom, just like that, we've added 20,678 sats to our stack. We purchased at a US dollar price of $94,545. There were some fees in there, so the effective price is a little more than that. And that means our stack is now 10,272,926 sats, and it did increase our average cost basis a little bit. That's the nature of the beast. The more expensive we buy, that's going to start shifting that average up. You know, when we first started the podcast, we bought all the way up to the 2021 all-time high, and that the average cost basis kept going up. And then we bought all the way down and all the way through the bear market, and the cost basis started creeping down a little bit. Now, with our average cost basis so low at just $35,043.57 now, we're going to be seeing that basis go up for the rest of our lives effectively. But that's cool because we still stacked a heck of a lot cheaper on average than we would have been able to if we had YOLO'd in. Perhaps most importantly to some of you listening, if not all of you listening, if we don't add a single sat to our stack, if we don't purchase, again, if we just stopped DCAing altogether, that stack of sats will at 100,000 Bitcoin, which we've already achieved, has a US dollar value of $10,272.92, a heck of a return for just $3,600 US dollar, $3,600 US dollars at just $20 a week. When, not if, but when Bitcoin hits 1 million, that stack would have a value of $102,729.26. Starting to talk about life-changing money for most people, maybe not for Michael Saylor, but for most of you listening, $102,729 can make a heck of a lot of difference in your life. You know, Samson Mao called for 1 million by the end of the year, and obviously that didn't happen. It's not that it was an outrageous prediction because you don't know. I mean, the fundamentals for why he made that prediction are still there. It just wasn't to be, and who knows? It might not happen this cycle, but I firmly believe it will happen eventually. And when it does, considering the average American has less than $500 in savings, can't even cover an emergency medical bill, having a $102,000 nest egg is putting you way ahead of the average person, even in a fairly wealthy country like the United States. Of course, Fidelity predicted that by the year 2038, Bitcoin will be worth $1 billion. You know, that might seem as outrageous as Samson Mao's prediction of 1 million by the end of 2024. But again, the fundamentals are there. When we get nation state FOMO and when corporate FOMO accelerates, the only way for them to stack as much Bitcoin as MicroStrategy is to pay an exorbitant US dollar price for those Satoshis. So if and when Fidelity is right in their prediction, the current stack without adding a single extra sat would have a US dollar value of $102,722,260 US dollars. And I think that's life-changing money even for billionaires. I mean, that's $1/10 billion. So of course it's life-changing money. It's certainly life-changing money if you had kept your life savings in fiat and your fiat hyperinflates to zero. So the difference between 0 and 102 million. I mean, what can you say, right? Again, you know, getting rich quick is not why we're into Bitcoin. We're into Bitcoin to avoid going poor slowly, or in some countries going poor quickly. We've seen, we saw another national currency collapse just this month with the overthrow of Assad. So I think for most people listening to the sound of my voice, you understand where I'm going with this. As usual, before I wrap up, I would like to ask those of you to help support this podcast by sharing this episode, by rating and reviewing this episode, and if you're listening on Apple Podcasts, making sure that you have automatic downloads enabled for this podcast, because they did that chicanery where they turned off automatic downloads for small podcasts about a year ago now. And all of that feeds the algorithm monster, which means it's more likely that people will see this podcast when they're searching for Bitcoin content to listen to. So just by sharing, rating, reviewing this podcast, you may help Orange Pill, a future pleb. It also helps feed that algorithm monster if you follow us on X or Twitter. And on Twitter, we are at BTC Bulletin Pod. We do not pay for our blue check. Because of that, we're effectively shadow banned. We have very few followers on Twitter. If that's you, if you're not following us on Twitter, you can make a world of difference just by going to at BTC Bulletin Pod and click and follow. I don't spam you. I put out maybe 1 or 2 tweets a week. Usually it's just to remind you that we posted the latest episode and maybe 1 or 2 of the articles that we talked about during the episode. But we certainly don't spam you. We don't have any sponsors. We're not trying to sell you anything. And you can help support this podcast for free just by following us on Twitter and helping feed that algorithm monster. Hopefully next week, I will be back in the Bitcoin Bulletin Podcast studio on Florida's beautiful Space Coast as we grow our stack together on the next DCA Wednesday episode. But either way, don't forget to keep on stacking those sats, you sexy sat stackers. And Happy New Year.